Hello and welcome to Varn Blog, and I'm here with uh, Nico Villarreal, everyone's favorite writer and part-time amateur economist, which is what I'm referring to myself as well these days. Um, Increasingly, because I don't think that having a background in economics is anything more than an amateur profession anyway, even if you have a doctorate in it. But that's just me. Um,
I
People
guess
may
good
go,
call.
yeah, people may go, I'm arrogant on that, but I've read a lot of economics for a long time and realized that like basically nobody knows what they're talking about.
No,
Um,
just have more complicated ways of saying it.
right, exactly. And some and bizarre priors actually, if you're into formal economics,
Yep.
fun stuff like market equilibrium and the abolition of time. Um, but we're not just here to talk shit about the economics profession because we do that every day. We're here to talk about Silicon Valley Bank's collapse and its particular conditions, and I'm gonna name what I understand to be its particular conditions from mainstream reporting right now, um, and from friends who work in the quote tech area, which is an incredibly vague arena of employment. Anyway, all right, so Um, Silicon Valley Bank was a all venture capital backed tech back bank, mostly focused on tech startups. It had something like 65,000 companies with deposits. In many cases, it had essentially all of their cash on hand in the bank. 97% of deposits were above the 250K range, and thus anything above 250K is unprotected by the FDIC, a risk that most of us don't have to deal with on a regular basis, or you're smart enough to open new account once you hit 250K. Like, there's ways to avoid that, but that's really hard for a business to do, to be fair.
Hmm.
So there will be an immediate downturn in payroll, um, and there could be as much as 100,000 tech workers laid off in the next 2 weeks. Um, which might wipe out a good portion of the current generation of tech startups. There's a lot of questions around that. Um, I think it's interesting how, despite those numbers, that this looks fairly contained both regionally and sectorally. And I've been talking about that in regards to tech in general. In fact, I had a, a video that's coming out in 4 hours explaining the layoffs in tech are just social contagion meme that was going around thanks to a Stanford University business professor. Uh, and I was going to explain that while it is actually probably more expensive for these businesses to have these layoffs, particularly when they're as untargeted as they were, that was mostly about increasing stock price dividends to avoid getting sued. And then it wasn't just social contagion. While it might be framed in needing to cut costs, if you actually look at the cost of laying workers off and rehiring them, which some of these places are having to do, it is not particularly cost effective. It tends to actually lead to a spiral, which is good for shareholders, but bad for the long-term existence of the business. Um, but this is not the same thing, although it shows some of the same fragility in the market in regards to interest rates. Another bit of context yesterday morning is I was reading, I think right before this was announced, I got up early here in the Mountain West and was reading news. It was written at like 4 o'clock in the morning, Eastern Standard Time. And it was talking about how how the markets were reacting, not just to this Silicon Bank thing, because I don't think that was even in the article, but also to the fact that employment numbers were too good, and it predicts that the Fed may raise the interest rates up to 6%, which in a market of 2% growth, which isn't great in good times, but it's the average for the past 35 years, maybe longer, um, is kind of a a bad set of conditions, and we've really only seen these sets of conditions going into the 1983 recession, when you had low growth and really high interest rates. So,
well, before we go any further, let me first. I have lots to say about the 1983 comparison, but some background on me first. I actually used to work at the FDIC.
You're a class trader.
Yeah, I was an intern when I was in college for 2 summers, and since then I've gotten some background in accounting, um, but in economics, amateur economics, as you mentioned. Um, and one of the things that I learned while I was there, I've read a lot of the materials they had on hand about like the history of the savings and loan crisis and what happened in 1983. There's one, I mean, part of the big reason that there were so many small bank collapses or like bank failures at the time was actually because interest rates were going down from such a high level. The value of like this is kind of the opposite of the problem that um, Silicon Valley Bank had, because their problem was that the price of the bonds was going down because the prices of bonds and their interest rates are inversely correlated. So when interest rates go up, the prices of the bonds go down of like the on the secondary market. Um, so all of these bonds that they bought, that they use as reserves, and are the assets that they have on hand to sell if they need to give people their withdrawals. They had a much far less value than they expected, and that's one of the reasons why they went under. And these are like these losses that they took on the bonds, on the price of the bonds. These are usually unrealized for banks because they're not going to sell them for a loss unless they have to. But the problems that the banks had in the 1980s was that because interest rates were falling, the way that the banks make their money is that there's a spread between the loans that they have and the bonds that they buy. Like those have a specific interest rate that they get as income, and versus the interest rate that they have to pay to depositors. And that spread determines, usually for commercial banks, how much profit they make. And when you have a falling interest rate environment like you did in the 80s after like the Volcker shock and what have you, this basically meant that because deposits lag those changes in interest rates, that they were losing lots of money because they were having to pay more in deposits than they wanted to versus the income they were getting less income than they expected on the loans they were making and on the bonds that they held. And so the crisis of like the savings and loan crisis, there's several reasons for it. There was also this whole deregulation thing that they invested a bunch of risky stuff and it blew up.
Yeah.
But there was also like the more fundamental economic fact that there was a crisis of profitability for these banks.
Right.
Which is a little bit different than what happened here, which was a very traditional bank run that like a bunch of people got scared, and especially in Silicon Valley, these people were all on certain emailing lists. They were connected to like Peter Thiel or certain venture funds, and they were told, pull your money out of this bank, and that's what caused the crisis of confidence in the bank run.
Right, and they were told that because on Wednesday, there's Silicon Valley Bank reported about $2 billion of loss in assets. But again, as you said, normally this would not be that big a deal. I mean, it's a big deal, but it's not a bank closure deal normally.
No, in any other, if this was another regional bank somewhere else, the businesses there wouldn't have that connection of communication that would have caused such a bank run. And so, and I've been looking at the statistics because the Fed, the FDIC, like there's statistics on bank assets, like all commercial bank assets that are in the country. I've been looking at the small ones and in general, the summary statistics. There's a couple metrics that you can use to look at how healthy banks are. The easiest ones for the macro statistics that we have are if you're looking at the loan share of assets, which those tend to really peak right before a crisis or during a crisis. And those, like, they're at relatively higher levels for small banks and banks in general, but they're still at lower levels than they were in 2008 and 2019.
Right.
And I should mention that in 2019, I was predicting that there would be a banking crisis because a lot of metrics were approaching for small banks the levels of like the ratios were showing levels similar to 2008 for several of these things.
And COVID and the high levels of reinvestment into the economy / asset inflation that happened under COVID basically forestalled that from happening, right? I mean,
Yes.
that's
Well, I mean, the biggest thing that happened in COVID is that the checks that were sent, the relief checks that were sent, were deposited in banks,
right.
and that meant that the banks had a lot of deposits on hand that solved basically any of all of those problems at the moment.
Basically, an unintended direct injection of liquidity into
Yes.
the American banking system through personal deposits as made by the government, right? So,
Correct.
so there's a couple of things to deal with here. One of the things is from the 800-foot barely informed view, which I like to think I'm not one of, but the further back you go in time, the more I'm usually dealing with aggregate statistics. A lot of people are feeling deja vu to 2007 or to 1983. We already talked about the problem with the 1983 comparison is that in the initial phase, it looks very similar, but in the fine detail, the way that interest rates are actually currently predicted to head, they're going in opposite directions, right? Like, so, and you have to think about what the interest rates were way back in after the Volcker shock. I mean, we're talking like 8-9%. Like we have, like, literally, we can't imagine what a Volcker shock style interest rate would do to the world economy right now, but it would be bad. Another thing is we're at 2% growth, and I hinted at it, but I've been looking more and more at theses of profitability, and I've come into kind of a wall that many people take their baseline of capital profitability from either the accumulation of capital and like the early industrial period, of which you're doing like 20% growth or something crazy like that, or from the 1950s to 1965, where U.S. profitability rates, particularly in manufacturing, were going through the roof. But that was specifically in the context of being the only economy after the war to have all of its developmental infrastructure untouched, basically, and rebuilding several other countries' infrastructure at cheap, which created this profitability in manufacturing that is really abnormal, but is taken for a baseline. Now, what does that have to do with right now? Well, right now, there's a lot of talk about how we're at really low profit rates. And I think we are in a profit rate downturn. I do believe profits have a tendency to fall. But historically, it's actually not that weird where we're at right now.
No, I mean, we're at like the 60s level of profit rates.
About 1968 level ish. Yeah.
Cyclically speaking, we're going down a bit. It's not even, I don't think it's as bad as it was in 2019, actually.
So in 2019, I felt like there was a bomb about to go off. And I felt like with asset appreciation / bank instability, etc., that like we really were on the verge of a major recession that was going to explode on whoever won the next election. COVID conditions threw all that into haywire because basically neoliberal conditions and the particular way in which it handles the business cycle was thrown into disjunction. Like, furthermore, it accelerated a whole lot of people out of the workforce. And when you add in that immigration restrictions, you have what you have there too. So there's a whole lot of conditions that we just don't. I actually can't think of a time in U.S. history that actually has the particular set of conditions that we have right now.
Now,
Like,
the big X factor right now is it's not the level of interest rates, it's the speed at which they're hiking them, which is
mhm.
kind of unprecedented.
It's
Uh,
super fast. We've gone from almost 0 to 6% in 2 years.
yeah, I mean not
Like,
quite 6%, but we're like, well, if you're talking about mortgage rates, then that's a 7% now.
right.
Um, but the thing about that is, if you think about profitability, not in terms of its aggregate levels, but is its distribution, you start to think about how interest rate hikes are affecting the bottom end of the distribution of profit rates for firms. And this is especially going to affect small firms, which are less profitable, um, and certain industries like if you're a small farm, I don't think you're even earning 6% profit rates. Um, the like the this for unprofitable firms, this is the big shock is interest rates, and it's affecting, and that's one of the underlying causes of what happened is because of how the interest rate hikes are affecting the tech industry, particularly tech startups, which are necessarily going to be unprofitable. The whole idea is investing into these to eventually get a profit. So a lot of these firms that were at this bank were unprofitable, and were probably having their own cash issues
Yeah.
that may have contributed to this.
Any
Um,
cash flows historically would have been based off of leveraging the cost of debt off of future profits, right? That's how these normally go, with
mhm.
venture capital making up the difference so you can get the initial debt holdings. And with interest rates being what they are, that debt strategy is a lot harder to do.
Yeah.
Like, and I think that's part of what's been driving the current tech layoff in general, even if they've been
Oh, it is.
highly inefficient. I mean, it's clearly been stock buyback dumps. Like by dumps, I mean we're going to dump a lot of employees to temporary raise stock price so that we avoid getting sued, and then we're going to strategically hire some of those employees back at a cost. Like,
Yeah,
so,
for some of the, if you don't plan it correctly, I mean, that's definitely what Twitter had to do for some of them.
yeah,
Um, I think
Facebook had to do
the
it
bigger
too.
question mark is, to what extent do these conditions apply to the rest of the country? Because a lot of small businesses, like the interest rate problems, I mean, small businesses that aren't associated with highly speculative leveraged sectors like tech industry won't feel it first. Like this is obviously where we should expect to see pain first. It makes sense. But small businesses all over the country are also dealing with these conditions, and small banks are also the weakest link in the chain, besides like venture capital hedge funds or what have you. They're the weakest link in the chain in the real economy, basically.
Aren't they always the weakest link in the train after venture capital hedge funds?
Well, it's they actually when I was at the FDIC was the time when Trump was passing the reform bill on for small and mid-sized banks to
Mm.
get them exempt from a lot of requirements that were put in place after 2008. So they were a lot. They had a lot more regulation. They weren't as weak before that happened. Um, they're definitely weaker now. I don't think they're as weak as they were in 2019, but they are kind of approaching those levels.
So, why do you think in 2019 only those of us who are Marxist weirdos were really worried about how weak things were? Because I re- there's a bunch of trends that were going
Mhm.
on at the time. One of which is like the seeming validation of modern monetary theory in mainstream economics, which made it seem like that so many, like I was listening to NPR and what Capital Isn't and all these like fairly mainstream econo blogs talk about how well profitability debts in the business cycle and debt levels and inflation just don't seem to happen anymore. I was like, what? Like, but that was they were very much basing that off of like, and this would usually pivot into, well, maybe Stephanie Kelton has a point. And I remember feeling and people who listen to the channel know that I'm not actually as hostile to MMT's like basic conditions, the way it describes how fiat currency works. But when they start talking about natural interest rates and stuff, my eyes glaze over and I feel like I'm being told something that just I don't see any historical evidence for, or actually even categorical evidence for. So that was being talked about a lot in left world. And so a lot of leftists were not looking at long-term business cycle trends. They just weren't. Then we had our gaggle of Marxists to predict the imminent crisis of capitalism every 3 weeks.
Yeah.
So no one listens to them, including me. like so, I might be a final crisis guy, but I've gotten way off on like I'm not predicting it, guys. Like we've been wrong every time. So it did seem like when I would talk about stuff like weird asset appreciation and bank and like just weird, I wasn't actually as specific as you, but I was like, there's some weird trends going on in the banks right now. I don't really understand how they're this solvent.
Well, I mean, part of the thing is that because like we're actually in a better position now in terms of like from like the capitalist perspective because inflation is going on than we were in 2019 where we didn't really have that much inflation because in 2019 we did have a very strong labor market. And right now we're kind of offsetting that by like the higher profits through higher prices. But back then they didn't have that. And the other thing that was going on that was kind of flying under the radar, there were some problems in agriculture at the time, and this kind of fed into the problem with small banks that they were having at the time. That a lot of farm loans were being offloaded onto small banks from large banks because they were becoming more risky. And agriculture historically has been a big driver of bank failures. It happened right before the Great Depression. It happened during the savings and loan crisis. Because that is a sector that feeds into small rural banks across the country.
Right, a highly leveraged area, and also like highly volatile area, except in places where the federal government can intervene to stabilize prices. Because not only do you have your natural business cycles, you have fucking nature.
Yeah,
like you have crop failures, this and the other, and that's why agriculture is always been fairly low profit.
Well, it's low profit if you're a small farm. If you're a very big farm, you can have. I looked at the statistics recently. They'll have like profits over 20%, generally speaking. But the small ones are barely hanging on.
Right. Well, it's one of those things. Okay. There's a reason why Marxists predict monopoly conditions emerging in most markets is because a lot of these markets with a lot of volatility actually are mitigated against by power law in ways that returns high levels of profitability, right? Now that's like Marxism, it's not 101, it's like Marxism 400 or 22 or something. But like it is important why we talk about that, right? Because it's like that's why there's a tendency towards monopoly capital. It's not just unfair advantages and leverage, although all that's real, right? But also because like a lot of these highly volatile, like even think about it. I want people to just think about it geographically, okay? Because this will make more sense. If you're a giant agribusiness and you have farms all over the fucking country, if something happens in Oklahoma, not that big a deal. If you are a small farmer and you have a localized drought, you are fucked. Like it's kind of that simple. Like,
yeah, and part of it is also like it's one of those industries where people want to get into. There's people have dreams of being farmers, like they have dreams of owning a restaurant or being an artist or whatever, and that pushes the profit rates down, especially on that low end for the small businesses. But I haven't looked into the agriculture sector recently. I don't think that like we were the same problems are present.
I don't think so either. Part of which is because honestly, conditions for food growers are actually pretty good right now, in the sense that there's been a lot of crop failure and there's complications from the war, so food is getting premium prices. And you kind of know that because go to the fucking grocery store.
Now, but the same kind of dynamics that we're talking about can produce problems, even in that situation, because of the distribution of where it affects. Because even if higher prices really benefit some farmers, the ones that had crop failures and aren't able to get as much market share might go under.
Right, and that's going to lead problems to the regional banks, right?
Right.
That's where that's a problem. I remember growing up. I grew up in the South, and there were tons of small farmers banks, and a lot of them actually got liquidated in 2007 and got consolidated into Bank of America and a few other big banks like that.
Yeah, one other thing with the bank liquidations, what we're seeing in Silicon Valley Bank, I forgot to mention this when we were talking about it earlier. We probably won't see as much layoffs directly caused by this bank going under as people are really afraid of, because the FDIC will make sure that most of these deposits get back,
even if they're not insured.
Even if they're not insured, because the bank still has assets, and those assets are going to get sold, and they're not going to. And the liabilities are the first in line will be the depositors, the people who the loans to the bank. The investors are going to be the ones who are put last in terms of the money the bank has. So the biggest, most of these people, I don't know if there might be a delay in payroll or something, but they'll probably get their money back. The bigger implications will probably be for the investors. They'll probably be for the private equity that's thinking of that is investing in tech right now. There's definitely probably going to be more pullback, more because risk averse. There might be a part of the reason that the economy is so strong right now is because I think that a lot of big financial institutions are not tightening conditions very much, because the Fed wants tightening and they raise interest rates to do tightening, but ultimately that a lot of it comes down to banks and their decisions on whether to make loans or not. And right now, a lot of banks
are still making very high interest loans, and people are still taking them, and we know they're taking them because personal debt loads are going through the roof. So
if this causes banks to start tightening their conditions, then we could start to see a broader recession in the economy.
I mean, the question, though, and this is unique. I can't think of times in history where population and the workforce was declining as severely right now as it is right now. When you go to other times where that has happened, you go to war. All right, so War I, War II, Civil War, Mexican-American War, Spanish-American War. Actually, Spanish-American War doesn't affect general population enough, but definitely Civil War, War I, and War II. And you go to plagues 700 years ago. So and we've all known that this demographic shift was going to happen. And there are certain neoliberals right now, say Fareed Zakaria, who are crowing a lot about how progressive it would be to raise unemployment by allowing mass immigration. Now, I realize that a lot of people don't want to talk about the immigration issue because it kind of cuts against everyone's narrative. If you're a conservative, it cuts against you. If you're a progressive, it cuts against you. Progressives have been well, it doesn't have an effect. And I'm well, it does have an effect. It has a positive effect in the overall accumulation of wealth, but the overall accumulation of wealth has actually been favored to such a small slice of the population that it really, there's a reason why, more than just bigotry. Although bigotry is a large part of it, do not get me wrong, I'm not making any excuses for it, for why people have felt pinched by immigration. And I think the biggest tell is you started seeing anti-immigrant movements beyond just large groups of white people, which I believe is why the Democrats haven't really done anything about it. So that's one condition, right? Another condition, I mean, one thing you and I have been quietly predicting, because I know we predicted it because we talked about it a year ago, and then it started happening this year, was the relaxation of child work laws. I've been predicting is going to happen. I'm also predicting we're going to see a relaxation of mandatory schooling laws, because not for different reasons, as we don't have the teachers, and even when they're decredentialing teachers, which Florida is going to be a vanguard on that, unfortunately. I think even with that, they're going to still have to start like reducing the pressure on schools, and there's only a couple of ways to do that. One is online programs, and the other is making it legal to drop out at 14.
And even in Arizona, they're like, you don't even have to graduate high school to be a teacher there.
Right.
But they don't have they're not having too many people trying to become teachers anyway, because it pays so little.
I was about to say Arizona. Okay, Arizona and Florida. Just so you guys know, there are ways, if you're like in the world market, that you can tell a place sucks. If you're if you are, say, in international education, which I was for over 5 years, there are places that produce those teachers. I can tell you, Canada. Now, Canada schools are great. Canada overproduces teachers. Like they literally graduate like a third more than they need every year. So they export those to the international teaching market a lot of the time. And then Florida, Arizona, Colorado. Louisiana, Mississippi. If I was gonna meet teachers like who are like willing to work for like very little money in U.S. terms, although pretty good money, in international terms, right? But if you had U.S. debt, still not super great for you. They were always from those states, and lo and behold, those are the states where decredentialization is happening the first, and it's not fixing the problem, because even by removing the credential requirements, you can't get people to do it unless they're motivated by some other reason. Another example of this is a lot of school staff. A lot of school staff has trouble recruiting because, like, the school registrar, for example, makes less money than, I don't know, a new hire in lower management at McDonald's.
Yeah.
Like, and so you can see these trends. Like, so why am I talking about this in relation to the Silicon Valley thing? Is we're seeing a whole lot of structural weirdness in the economy right now. One of the things that I was pointing out to people is like, oh, there's tech layoffs. I'm like, yeah, but I don't see evidence that there's large other layoffs coming. We're actually absorbing these tech layoffs. Like, the overall unemployment rate has not spiked. Like, now they're in shittier jobs, I'm sure, but it's not, even from the standpoint of like lowering the minimum, like urban wage, like the real minimum, not the minimum wage just set by the government, but the one that's actually on the market, which is something like $14.50 or $15 in most places now, for a variety of reasons. The federal government raising its pay, but also just like inflation, etc. I mean, like, so all these conditions are in flux. So a lot of people seeing these tech layoffs or these tech bank failure are expecting it to ripple throughout the economy. And I think it's going to, but not in the way they know. And they go back to the last crisis. That's always your image for what's happened. So everyone's predicting 2007. 2007 was weird.
Yeah.
Even at the time, I knew it was weird, because that's why you had such a hard time getting people to predict it, even though it, like, on your normal 5 to 10 year business cycle, it was due. But we had not seen conditions like that before since the New Deal. right? I guess the savings and loans crisis was a little bit like that, but not really. I remember reading a lot about the savings and loan crisis in 2006 and it not being super explanatory to what I was seeing then.
Well, it's interesting how, because I mean, even now there are echoes of '08 in the sense that the housing market is definitely overinflated, and if you see that if you compare it to like rents and several other things, but it's not as bad as '08. People aren't having as many, like there isn't such intense money going to consumer loans or to home loans like there was before, and it's not. And
even though home
banks,
prices are more unattainable than they were in 2007, I will
yeah,
point that out. But yes, they're not this because there's no subprime market. This is all like what's driving prices up is investment property, like, and now things like so. One of the things I've talked about one of the pressures off inflation is actually there was a lot of housing stock that's come online in the last 6 months. It's just not going to sold houses because the interest rate's so high and people are very hesitant to buy because they would literally still be paying the same monthly payment as they would if they bought a house that was much more expensive. It's going into rental stocks, which is sort of the rent. I'm not saying rent's going down because it's not, but the rent increases have slowed.
Yeah, and they're much slower. Like if you look at the relative prices of rents versus housing, just buying the house, it's much lower, and it has been since the COVID happened. And those eventually always converge back together one way or another. That's if that's a historical fact. So
and if
either
it
rents
doesn't,
are
there's
going
going to be some weird ass third thing we have not ever seen before.
I mean, either rents are going to go up or housing prices are going to go down. I think it's more likely that prices go down at this point, somewhat.
But not like the adjustment in 2000. There's a whole lot of people I know who got wealthy off of being able to just having some liquidity, any liquidity in 2010, when you could buy a house for like $100K and sell it 10 years later for almost $1 million. And you laugh, but I definitely know people who did that.
Yeah, I'm sure there's some markets like that.
DC was one of those markets.
Yeah.
Now California was not, but New York was not. But we've already seen, for example, one of the things we did see over COVID is rent equalization, which I think meant that. And what do I mean by that? Certain rental markets saw a decline. California, New York, and other rental markets saw an incline in the beginning, very steep inclines at first, and then they stabilized out. And so that's actually sort of a market equalization because of more distributed population. Like the population hubs are not as necessary. Tech, interestingly, was trying to push back against that. I was seeing places like you have to get approval to where you can work, and you need to be so close to the office if you come in for so much a month. But I don't know that it's had much of an effect.
You see, this is the weird thing, is that there's echoes of lots of previous crises. You have the .com, you have in like the tech thing, you have '08 in like the high housing prices, and you have to a certain extent the savings loan with the sudden bank failure. But they're all different in the distribution of where this is happening in the country, how it's affecting like smaller actors is unusual.
I'd be worried about California.
Yeah, I mean, I would definitely. Well, I mentioned this on Twitter, but the largest FDIC loss to their insurance fund was also a regional California bank back in 2008. It was IndyMac, which was doing crazy.
I remember that.
Yeah, subprime. I think one of Trump's cabinet members was actually related to that. One of Manchin's buddies, I think. But it was something else. And honestly, I think those Californians, they might not be very fiscally responsible.
Yeah, who knew? Also, there are interesting trends about the U.S. regional economy that Marxists, I think, don't talk enough about. One is all the counter-cyclic parts of the economy, which is like where not Utah actually, but like the places around us, like they're always doing better when the rest of the country is doing shitty because mineral resource prices
Well, the funny thing
tend to do
about I
well.
don't think that I mean maybe some other places might do well because of that, but Salt Lake City is going through its own crisis. It's ecologically driven.
Oh yeah,
Uh,
we're about to have a well, we've had plenty of snow. But right
mhm.
before we got all the snow this year, because we've gotten 1983 levels of snow this year. But right before that, I was talking to my partner and like, when are we going to have to relocate to somewhere else because we're going to be dealing with an arsenic cloud. And so it's, and we actually we had to turn away tech business because we didn't have the water to cool the servers down.
Yeah.
Like, um, and we've been building up, like, Utah's been like, hey, we're the clean and low tax, friendly living, none of those dirty California's tech hub, the Silicon Slope stuff. And that's been dramatically slowing down. And the other thing that's slowing down is we were too hot of a housing market, both in rents and in home prices, and people could not afford to move here anymore.
Mhm.
That happened to a couple of Western cities like Boise, Idaho. Not a city that you think of as being booming, I admit, but it was. Um, the the water crisis out here, though, is going to be a long-term player in
Mhm.
limiting the growth of the Mountain West, which was otherwise booming, and that applies to pretty much everywhere but Wyoming, because Wyoming just doesn't have that many people. And so and when I say Wyoming doesn't have that many people, I really do mean it. Like, it's got
Mhm.
there are boroughs, sub boroughs in Brooklyn that have more people than the entire state of Wyoming, but um, that's an interesting trend, and no one predicted it. Like,
Mhm.
I don't mean to vindicate Nassam Talib, but I'm going to vindicate Nassam Talib's like somewhat patently obvious Black Swan book from like what now 13, 14 years ago.
Mhm.
Because we are seeing just like people operating on predictions that they're going to assume are trends that they can extrapolate to the next year, and that trend blowing the fuck up. And some of them haven't even been like negative. It's just been like, what? Like, um, so that's why I talk about complexity so much. Is it makes it hard to deal with. There was a good question way back at the beginning of the show, though, from a listener, Carl Shepard, who asked, why isn't normally deposits above 250K insured by private industry? And that doesn't seem to be true in this case, but I do know it to be historically true. So what's going on there?
I'm pretty sure it's a thing. Um, not all businesses have that.
I think a lot of
Certainly,
startups just don't have enough like
yeah. I don't think
excess
startups would worry
capital
about it.
to, yeah, and they're not planning that far out. Like,
Mhm.
because I remember that's like what totally screwed AIG was securing what were they? They were securing the interest, the like the collateral debt obligations, but like it was
Mhm.
also an insurance bomb.
Yeah.
Um,
Well, I was reading, we've been talking about the U.S. economy, but there are also implications for the global economy that are similar dynamics because of the way that interest rates are rising on, like U.S.
pretty
debt.
much,
Huh?
pretty much everywhere.
Yes, but it's important, especially for U.S. debt, because everybody buys treasuries for
Mm.
reserves and stuff. And apparently, one of the big buyers of that is like Asian insurance companies that use that as reserves and so on. Kind of a similar dynamic to what Silicon Valley Bank was doing. And they're probably like if they have a big shock and they need a bunch of payouts, they're going to have less money on hand than they expect because of the price of the bonds going down.
And there already have been Asian bank runs in the last year and a half.
Hmm.
So, not related to this, actually related to the Chinese housing crisis. But like,
Yeah.
um,
That was interesting. It certainly seems like the FDIC equivalent in China is not quite as mature administratively as like the U.S. is. Um, Probably because they
yes,
haven't had to test it so much because the economy's been going so well there.
I was about to
Um,
say like. China has not had business cycle conditions until the last, say, 5 or 6 years.
Yeah. Since like 2016, 2014.
Yeah. I mean, there's been a long-term decline in the rates of growth. Notice I didn't say. I sometimes say growth, and people are like, they're right to technically point out that China's been growing.
Yeah.
But like in around like 2008, China was growing like 13, 14, 15, 16%. And then all the China doomers, the former, like the precursors to our Peter Zions today, were predicting that as soon as China hit 10%, that the entire country would fall apart. And like, I mean, it seems so ridiculous now. And I even thought it was ridiculous then, but it was like common wisdom amongst your foreign policy and finance types. But what we have seen now is China does have to deal with the fact that it is having market cycles. Some of them have been exacerbated by things that are not, quote, extraneous to the market. And yes, I realize nothing's actually extraneous to the market. I get that. But we have to talk. We have, like, for the model's sake, we have to admit that, like, what we mean here is it's not about market transactions exactly. Between zero COVID and the war in Ukraine complicating their planning.
Yeah. So I think that this question of like a uniqueness, unusualness, and complexity are kind of related. You might have seen that graph I retweeted the other day about like U.S. recessions and how common they were before the Great Depression.
Oh yeah, they were like depressions were common before the Great Depression.
And this is, I think, like why, like we have basically figured out a way to regulate the business cycle at a certain level. We figured out how to prevent bank runs and everything. Like we prevented a certain level of fragility that was in some ways obvious, that we figured out a way to deal with it. The FDIC basically means that there aren't bank runs that spread wildly anymore because ordinary people know that their money's safe.
Right.
And
which
China
also,
will probably,
interestingly, changes monetary conditions from like the 19th century, which was like stable to slightly deflationary, to the 20th century, which is stable to slightly inflationary. I mean, well, not stable, slightly to moderately inflationary. Like,
and those conditions are, I think, more like amenable to capitalism in general.
Agreed.
Because they need, like, it creates nominal macro profit growth.
It creates nominal macro profit growth. Also keeps workers from getting as pissed off because they have nominal wage increases, even if they don't have real wage increases. Etc. I mean, there's a whole lot that it obscures in a way that is good for capital management.
I think the deeper implication of this, though, is that in a mature capitalist country like the United States, and because of like the interconnection of global economy, the world at large, that it means that the kind of crises that we face are no longer necessarily super typical. They always have certain aspects, broader aspects that, like, as Marxists, we're pretty familiar with, but they're not like classical or typical in the sense that pre-1930 crises were, or pre-1935, what have you.
So basically, the complexity of the economy currently means we're always discovering new little bombs, like, and they're little, like, and so if we try to compare them to the previous moderately sized bombs, let's say, to maintain this metaphor, we will be surprised at what they do and don't do. Like, they might have more shrapnel, but not as big a concussion impact or something. I mean, you know, I'm going ridiculous with the metaphor here, but the point is, like, the effects are things we've seen before, but at different scales and in different ways than we've seen them before, because there is a way in which the periodization and function of capital has changed. And I and you, I think both, have been kind of talking about, I kind of felt like Robert Brenner recently ripped me off. Because I've been pushing back on the whole neo-feudalism thesis, but I have been saying, like, hey, look, guys, if you look at the real economy, something has changed. It is not like classical neoliberalism. And in fact, since the Great Depression, I can kind of map these shifts in like clean generational terms. It's kind of eerie. Like rise of Fordism, 1950 to 19, well, Fordism is actually a little weird, 1950 1970-ish. Rapid decline of Fordism, 70s. Rise of neoliberalism, 80 through 98, 99. Crisis of neoliberalism, 2001 to 2008. Weird transitionary period that we've been in since 2009 that nobody can seem to figure out exactly how it works, to COVID, and then I don't know what the hell we're doing now. But in a very real way, if like when we talk about neoliberalism, the function of neoliberalism has changed while some of the key conditions have not. Public-private partnerships, no labor at the table, etc. And that has a continuity and disjuncture with Fordism. Fordism has public-private partnerships, but very high manufacturing rates, very high profit rates. But they're kind of under unique conditions. And we've been having an argument, kind of honestly, like a lot of the economic argument in 2015 is about trying to figure out what parts of the Fordist conditions can we replicate. That's on the left. And then on the right, it's been like, well, neoliberalism actually isn't like ordoliberalism. What do we do now? On the right. And I feel like we're always like, and to be fair, this is not unique to our time period. I'm not talking, this is actually a perpetual problem. Like Marx talks about it in the fucking Brumaire, that you're always seeing the next political and economic conditions off of the last major battles. And I think right now, like Brenner naming this political capital, which I don't think his explanation of what that is actually is sufficient. I'm not going to like, profit rates are super low, blah, blah, blah. And the problem that you have is like profit rates actually aren't that much lower than they've been during the entire neoliberal period. Like, they aren't great. And they do go through cycles. But I was looking at work at Tim Baker, and I'm going to do an explainer video on this, but and with response to Brenner, and he's like, yeah, we see a tendency of profits to drop, but it's like, it looks like a classical business cycle, particularly if you bracket out that Fordist period after the war. Like that period is kind of unique in capitalist economic history. So
part of it, I think the uniqueness kind of stems from the fact that we don't have statistics that encompass most of the 19th century.
Yeah, our statistics basically are like, well, we got some stats.
Goes back to the 1920s at the most.
Yeah. Most of our statistics are based off of like what we know from market sales and projections. I mean, it's like that fun thing when you have Piketty figuring out like the growth rate of feudal societies, which I actually, as a side note, think he has a point on, but I have yet to figure out how the fuck did you figure that out? Like, what are you basing that on? Like,
I'm sure there's all kinds of archival research that went into that.
Right.
I think that if you look at the 19th century, I have a feeling, I haven't done too many hard empiric research on this, but I'm fairly certain that there's more things in common between like the Fordist era and most of like in the second half of the 19th century than there is with like that is a more common experience of what capitalism was, and probably describes it in certain developing countries as well.
I think it does. I mean, one of the things I always talk about in regards to the Soviet Union, because everybody trots out like the Soviet Union stat versus and I'm not a person who thinks that like you can talk about state capitalism in the Soviet Union the same way you can about like actually existing socialist states today, because that's like they have internal markets that are actually markets and the Soviet Union didn't. Not after the NEP. But I'm like, yeah, but you're looking at industrial growth from a new industrial society and comparing it to a mature one. And yeah, the new one's going to grow more. like particularly at the speed in which they're reinvesting. I mean, it's crazy what what the Soviet Union was attempting to do. Similarly, in the 1980s in China, you saw similar rates of growth for 15 years. Now, I will think it's a Chinese scholar, Dongping Han, who told me to look at what life expectancy rates were like, and that completely changes your picture of what that was. But you do see the same kinds of growth rates. What you saw there, though, was life expectancy rates, which went up even during like the Great Leap Forward famines.
Yeah.
Stopped. It didn't go down, but
Mm-hmm.
I think it may have dipped a little bit in the 90s, but stopped in China and did not restart until about the end of the aughts, and then like started catching back up from like 2011 to 2019, and now they're where you'd expect them to be, and of course now we have to COVID changes all those calculations for a little while.
Mm-hmm.
Whereas, for example, in the United States, and I think this is an interesting thing to point out about where the growth is going and who's benefiting, right?
Mm-hmm.
Is that we had good economic growth from the end of the middle of the Obama years into the Trump years, but at the same time, we actually saw life expectancy of the non-rich drop significantly.
Yeah.
Like, these are the kinds of things. So when we talk about these economic stats, you do have to balance them out to see a bigger picture by looking at other sociological stats. But I think you're right. I think if we looked at, say, the 19th century, the periods of industrial growth, we're going to see like crazy high initial growth rates. Like,
yeah, and we'll also see declining profit rates more clearly. I think a big part of what my research has been doing is looking at like those kinds of tendencies that described periods of strong industrial growth.
mm-hmm.
And also, like, if you look at what's going on now in the U.S. since 2008, there's been a big stagnation in like productivity in manufacturing and all kinds of sectors. Any kind of sectors that, I mean, pretty much all.
Been stagnation in everything but rents.
Yes,
Like,
and the thing that I think is important to get away from, like the research I've been doing on rates of profits and productivity and investment, like one empirical fact is that in the U.S., investment has converged with depreciation, which means that we're effectively at a kind of equilibrium of investment and the capital stock, which is partly why like capital intensity isn't really increasing, even in industries where like manufacturing that could benefit from it.
yeah, and I think the secular stagnation is even more pronounced in a place like the UK, where like there's even government incentives now to like reinvest in infrastructure, and they can't get private equity to do it. Like,
now it's possible that some of these dynamics are changing now with
mm-hmm.
like there's lots of money for onshoring, there's lots of
but there's not a lot of labor for onshoring. That's where I'm confused. So but
that could even be a good thing for like forcing them to make investments and stuff.
Oh yeah, because you'd have to enforce to. Okay, we have to increase productivity again because we've had productivity stagnation so productivity, by the way, productivity compared to wage growth up until 2007 was like crazy in the United
Mm-hmm.
States, like the amount of productivity per worker you were getting. And they were getting it through new technology. They were also getting it through basically browbeating workers to death. After 2008, it stops and has been like kind of steady, never returned. Like it's just like
it's like it's literally like 100 years of productivity growth and capital intensity growth stop.
Yeah, just stop. Just like
Mm-hmm.
and it took so long. I was out of the country when that was happening, but I literally was like, because I was still thinking in my head, oh well, these stats that I had when I left, they're probably, and I started looking at it, I'm like, what the fuck happened to productivity? It can't just be social media, which was the initial thing people were blaming. I'm like, yes, I'm sure that the bullshit job havers, asterisks, there's no such thing as bullshit jobs, but we all know what I'm talking about on asterisks.
Mm-hmm.
Nico and I have the unpopular opinion of thinking most things called bullshit jobs are just highly well, you would not use the term alienated because you're not Aryan, but
well, I mean, I wouldn't say that's the relevant way to talk about it, but yes, they are alienated.
Well, I think it's relevant when you explain why they think their jobs don't matter.
Sure.
Because what, as a side note, what Graeber based that research on was self-reporting.
Yeah.
It wasn't like a structural analysis of are the jobs actually important. It was the people feel like they're not important, and they don't feel like they're adding value. And to be fair, the value added is marginal. But you start letting those people go, a la Facebook and Twitter, you start discovering that a lot of those marginal value adds were really fucking important.
Yeah, they did
making
something.
Stuff work. Like, so
a lot of times there's institutional knowledge, there's like some like broader function that's important. Well, the reason I brought all this up though is like, I mean, there's a sociological aspect to it, but there's also this historically contingent aspect to it, because like I mentioned that like we're at an equilibrium of investment and depreciation, and that's feeding into all of this. But that equilibrium, as I've discovered in the simulations that I've done, is dependent on, like, especially dependent on how much capitalists are consuming and versus saving and putting in investment and stuff. So, like, the capitalist consumption, I think, has been a big key to like what's been going on here. There was this like hilarious, I don't know if you've seen it, post on Twitter about some guy making 400K describing his budget for the month, and how he breaks it down, and it's like 2,000, like 1,500 going to a car, and
no, capricious consumption's been fucking insane.
Yeah,
particularly when you add influential lifestyle to it. Like, it's been nutty. And I haven't run this by you because this is a structural change I've been pointing out to people recently. Like, okay, you guys look at wealth, you see the big income earners, all of which are like tech rentiers. Don't look at the Forbes 500 individuals, though. Look at the Forbes 400 or the Forbes 400 individuals. Look at the Forbes 400 families, and then all of a sudden, you notice like it's not those people at all. It's all the big names of the mid 20th century, like all those Fordist companies. Those families are like basically just consuming powers, from what I can tell. They're not even investing a lot. They're like still living off of like consumption, off of the interest of shit made like in the fucking last century. Like, and that changes the dynamic a lot. And I think that's part of what I'm going to be talking about my Robert Bernard-Deal and Riley responses to their 7 theses, and I have a very complicated response to them because some of those theses are great, some of them are, I think, wrong. But one of them that I've been really wondering about is like, why aren't we talking about the fact that the bourgeoisie, a good portion of it's out to lunch, like literally, and it's not even irrational that they're doing so. That's the other thing.
Well, yeah, it is so necessary that they do this, because so long as they can keep these consumption levels where they are, they can actually prevent they can prevent the whole kind of industrial dynamics that we're talking about, more investment, lower profit rates, the tendency for the profit rates to fall. This is how you preserve capitalism as a social system, is by them being out to lunch, by them like trying to just keep themselves afloat as a class and like solidify or like put in amber the social relations of capitalism.
Right. Which by the way, this tendency is where this whole neo-feudal thesis is coming up, and also the thing.
But that's the thing, though, is that it's not feudal.
It's absolutely
capitalist social relations.
Right. These are specifically late capitalist social relations, and the rentier part of it is only profitable when debt is cheap. So, I mean, only particularly profitable when debt is cheap. So it will have to change. We are already seeing it changing. I am not comfortable, though, because of the complexity of our current economy, trying to predict what's going to happen. The one thing I keep on saying is like, the vague outline of what Marx describes in Capital is still true.
Yeah.
But the particulars are way different than what they were in 1860. Like, and that's a very important. It's the entire, for one, like let's be the entire monetary system's different.
Yeah.
Like, another, no one ever saw the accumulation and structural accumulation of interest being possible like this. Like, I don't think they did. So that's interesting. Marx does hint, and that's actually Marx and Engels together, and Socialism, Utopian, and Scientific, that some of the, that their whole, there's the two seemingly contradictory theses of what Marx thinks leads to socialism. One is the tendency of monopoly capital to make capital more and more efficient, and to also circulate it in fewer hands. You could just, there's less of them to take away, so you can just get rid of those guys. And two, the vague immiseration thesis that he believed in the 1850s that he kind of drops, I think, in Capital. But he still think there's some of those dynamics going on. Bukharin's imperialism and Lenin's, gloss on that, is based off of those tendencies running straight into a head and leading to state rivalries in the imperial period. The problem that we have with that is they predicted that was the last phase of Capital.
Yeah.
And they were wrong.
Well, in some ways, I mean, they were wrong, but they were also right in some ways, because what they describe as happening to imperial powers is exactly what's happened to developed countries.
Yes, absolutely.
That, like, what happened to Scotland? It's a playground for millionaires and so on. It's like the industrial power of England is fading away. It's
right. In fact, it's faded away so much that it's about to find out what the downslide of that looks like.
Yeah.
Like because they're no longer, they have so fiscalized that they no longer have a role in the productive economy, and now that they've kind of accelerated that with Brexit, they look to have the worst economy of the developed world in the near future. I mean, like, in some ways, the conditions of London is going to look a lot more like Guatemala City. But I mean, been to Guatemala City, we can talk about that. But I think, though, there's a good question here asked by Eric T that I want to get into, because why is it changing? I guess the capitalism happening. What the fuck is the Fed trying to do? To a large extent, they know inflation isn't affected by interest rate state credit. So what are they aiming to increase interest rate? Well, so the mechanism of what they're doing is the same, but Nico and I have talked about this before. Their theory for why it might work is actually fundamentally different. So their theory for why it would work in the 1970s and 80s was that it would increase savings, pulling money out of the economy, slowing the need for credit, because the raise in interest rates will be passed on by banks, so they can just accumulate real savings, et cetera, and so forth. And you have slow reinvestment. Thus, slowing things down. What Powell and Yellen and co have said now is the reason why they do it is to increase the unemployment rate, to drop employment costs by making employment competition more viable, etc. The problem with that, one, is we just don't know how much. We still don't have a grasp on how much capacity was lost in the economy of COVID. And it's not just COVID. We would have lost these people eventually anyway, because the baby boomers were all about to retire. Like, this whole demographic crash that basically everyone's been talking about is kind of happening, right? The thing is, I don't see this actually that bad for workers. Except in areas like teaching, where things were already overtaxed and now they're just about to crack.
I mean, if we think about what they're saying, though, about like their goal to cool inflation is to loosen the labor market, is to knock workers down a peg. But if you think about what that entails for a second, it's kind of a very stupid economic policy.
Oh, it's a hilariously bad one.
because it's like one like because so much of the labor market is just gone from like these are older people who retired or people who died in COVID. That like and we are like the for people who are between like 16 and 55 or something like that, like the unemployment rate's been normalized. Those people are in the job market back. That's back to normal. Um, what that means is that if you're going to if you're going to increase unemployment in that situation, all you're doing is decreasing the output of the economy. You're decreasing real productivity. That is effectively what they're trying to do with the higher interest rates, and it hasn't been working very well because of like people like this need these inputs if they want to stay productive. Um, but if like the tightening conditions happen now because people are scared about the bank failure and hedge funds are backing out or whatever, if conditions tighten, investment pulls out, then you could really see that happen, which is much more similar to what happened. I mean, well, we'll see. Like a big decrease in productivity um, is more similar to what happened in the UK than like what the US experienced the past 10 years or so, which was just stagnation. Um, the I don't know, it could be a pretty bad experience because if you think about it, the productivity levels are important not just to like people who are working now. Now they're also important to all the people who just retired and so on. Because now this like you need higher productivity, you need higher output in order to support all these people.
Yeah, we have to support the remaining, the remaining baby boomers and the silent generation or Western. I can't remember what the fuck they're called.
Yeah.
But that group of people who are in their 70s and 80s, and you know, yes, they're dying in higher numbers than ever before, but there's still a fuck lot of them compared to
Yeah.
the generations beneath them. And so it's very hard to say. Plus, the international market's more volatile. There's all kinds of like there are people arguing about conditions in China. Conditions in China are going in all kinds of directions. And so far that I'm actually not comfortable talking about it because it's not because I don't see trends, but because the trends are cutting against each other. There have been a lot of there has been a lot of decoupling. There has been a lot of things closing off. There's also a lot of things opening up. One of the things that helped fight inflation in this early part actually is China slowing down because it actually slowed down the cost of a lot of raw materials production, but them opening up doesn't seem to be increasing inflation significantly. So there's other things going on there.
Well, I mean, now China can they can send things back overseas more. Factories are
right.
like it's
Well, I
that's
mean,
kind of
both China and the U.S. are weirdly outsourcing things from China. So China has pretty good capital controls though, so there's less of a risk of like a massive drain.
They're not going to become the UK anytime soon.
No, absolutely not. No, and I suspect they have some plans for this, but I will say China too has been affected by the world disruption of plans by the complexity of the economy.
Yeah.
And like the Belt and Road Initiative, it's going, for example, I've been talking about it, not entirely scuttled, but they're going to have to rethink it. And they know that. Like, so it's, I guess my thing about this is like, dude, we have a world economy, and until we decouple more, there is no way where what's happening and one thing's not going to have an effect elsewhere. But it's also, I think we need to quit looking at right now. People tend to look at, they want a unitary trend. And I don't see unitary trends like in one direction anywhere right now. Everything seems particularly shifting in a way.
Well, I think there is one trend that is being felt everywhere is that people want more redundancy and more like supply chain controls.
We do want stronger supply chains so that supply chain disruption doesn't, and that's good. Like, frankly, like the fact that we were getting that we were trying to market. We were trying to run food and like industrial production off of the same thing you do pure consumer demand goods like
Yeah.
books is insane. Like that never made sense. I'm like, that is a system that is prime for cascade failure like nothing else.
Yeah.
Um,
But with like with the disparate responses to these trends, I mean, like everywhere, pretty much all the developed countries are going to be experiencing the same thing with the population dynamics, and some countries are really going to double down on dealing with those in a way to preserve like those capitalist social relations in amber and not develop the economy further in like the progressive way that like a
yeah,
industrial.
the capitalists will have totally abandoned their historic mission.
Yeah,
Like,
and so in
like
South, even in like you think about how dynamic and how like high tech South Korea is, and they're going to try to respond to these problems. This came out recently of trying to raise the length of the working week,
yeah,
get people to work more, and that's
which they've done before. So one of the things they've done in South Korea that I think it's hard for Americans to understand, but I lived there for several years, so I can talk
Mhm.
about it. Is if you go to a South Korean retail store, it's overstaffed. It's highly over. Like there's literally like a person helping you on every aisle. That's their job, and they're there like 50 hours a week. Their actual hourly wage is shit, and their
Mhm.
productivity per hour is shit. Their overall productivity is okay, but there's like been a government policy to like instead of like push for formal wage increases to like, well, we'll just let people work more. There was a push back on it about 15 years ago, and what the current government's doing is undoing it in a way that like when people talk about, well, capitalists are always efficient, and that like me and Doug Lane used to argue about this all the time back when I
Mhm.
was on his show more, because one of the things about his kind of pure abstract Marxism is he believes in capitalists way more than I do.
Yeah.
And he thinks that like there's one unitary law, and I'm like, no, the prior forms exist, and like those prior forms affect social relations, and it really matters. And that's what you're seeing. So you're seeing all these attempts of like deliberate inefficiency to maintain
Mhm.
relations, but also to not have the mass instability of like a huge unemployed lumpen.
Yeah, this
Um,
is like I think it's both Doug's strength and his biggest problem, which is how much he relies on like
Pure
thinking about.
abstract deduction from capital
Well,
volume
I mean,
one
of
and
like
two.
thinking about the law of value as being the ultimate problem of like domination over people and so on, and not thinking about like the social relations and like the classes and as having their own dynamics
Right,
that.
right. Yeah, he basically it's a Marxism without any pretense to sociology,
Mhm.
which is clarifying
Yeah.
on long-term trends. And so Doug's often right about like Doug and I both were pushing it back against like I know people forgot that the proto well, they were MMTers, but they were the Minsky MMTers, not the current
Mhm.
neo-chartalist round. Saying that like Greece can just leave if it prints its own money, it can boost its own economic demand, and I'm like, that's fucking stupid. Like, 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 and it's funny because a lot of modern MNTers also go, well, that's dumb, and I'm like, yeah, it was always dumb, man, but you guys used to say it
Mhm.
because you basically treated all economic inputs as from the level of state accounting, and so
Yeah.
they're not looking at that the smaller you are, the more as a nation, the more subject you are to an international market,
Yeah.
and the less currency sovereignty you can possibly have. Not just like even if you want to, you just can't do it.
Mhm.
So there's a whole lot going on here. I know people are now arguing about China. It happens whenever I bring up China and talk about how mixed conditions, and I think a lot of people get frustrated with me because I am defensist on China, but also like, guys, it's not gonna fix all of our problems magically. And people are like, well, the third world is developing with China, yes, and doing a good job. And I think a lot of the Africa, and I don't think China's like doing debt traps for Africa. None of that. I don't see any evidence for that. But China doing business with the third world, even though it's developing as a long-term game, in the immediate future, it doesn't matter very much because that's not where capitalism is, or that wouldn't be the developing world. And like, hate to be that blatant about it, but
Well, I think that China and the other countries that have strong communist parties but are also integrated into the world economy are better positioned right now than anyone else, because they have the ability to discipline their bourgeoisie.
yeah, to a point. But
Yeah,
yes, they can discipline their internal bourgeoisie, and they can stop foreign bourgeoisie from doing massive capital
yeah,
drains, which uh, which is why I think we have to be somewhat defensist about like China and Vietnam, but that also makes China and Vietnam's position towards each other really fucking historically sad.
yeah.
Thank you, Sino-Soviet split continuing to matter forever. But it's also why, like, when people talk about BRICS, they don't have a lot of faith in that, not because of China or Russia. Honestly, it has to do with India not really wanting to play ball, but it'll play ball with Russia, but not China. So, and is benefiting.
Well, I think it's important because it's hard to see how. I mean, like there are certain ways you can see that if like the bourgeoisie really take over the communist parties to such an extent, it's like they are as a class the ones truly in charge. That is always like a possibility, but to think about like the problems that the U.S., UK, and other developed countries have in like doing what we've discussed of um, preserving bourgeois relations in amber and doing that
And like having some weird political class that
yeah,
it ministers that amber bourgeois relations, right? Like
exactly.
that both is of it and stands above it, but like that's a very weird and unstable balance that you don't see, because while it's both of it and stands above it, that is true that like you can't imagine you can imagine the state like punishing a particular capitalist for violating like some big social norms or state security secrets, but you literally can't imagine it disciplining them for violating like securities laws, like the actual main stuff of what capitalists do. And that's not true in China. However, I'm going to say this, and I'm not saying it to piss people off because I'm not implying that China's fascist, but fascist governments also did that. Like,
Yeah.
it's not unique to communist governments to
But
do
oddly
that.
enough, I mean, the fascist governments couldn't control them. Because weirdly enough, the U.S. was better at controlling the bourgeoisie during World War II than the fascists were.
Absolutely, absolutely, they were. But that's clear they can't do it now. And so the reason why I'm a defensist on China, even though I point out a lot of the same structural flaws as anti-China people, is I think there is a way that it can navigate this and be the basis for something like socialism without like total fucking chaos breaking out in the world.
Yeah. Because you can see that unlike the bourgeois like states that have developed that were developed as bourgeois states and like as a thing for themselves, um, like the Communist Party states, you can kind of see them taking the developmental path that was outlined in Capital of eventually going to state capitalism at some point, and then maybe something beyond that. Whereas everything was done to make sure that like that state capital phase didn't really happen in the Western world.
Right. Well, I mean, it kind of did. Well, I mean, here's the thing. Fordism and Keynesian social democracy as it manifested in Europe, which is slightly different but still pretty close, that developed to stop state capitalism as described in Bukharin and his work on imperialism that was developing pretty clearly after World War One.
Yeah,
like
it was done to preserve it. Like both that and then the neoliberal reaction were done to preserve the bourgeoisie as a class.
Right. So like I'm a defender of Bakarin, except what people talk about his most famous statement about socialism in one country, because I'm like, no, that doesn't work. That will not work. If the socialists cannot gear up with other zones, they are at a disadvantage with dealing with capital accumulation, and they will eventually be subject to them, which is why, for example, people talk about the export drop in China. Totally true. And that's because China can discipline its capitalist. It cannot discipline capitalism, right? It cannot discipline the entirety of the structural whole because it doesn't control it.
Yeah.
The United States can't discipline capitalism either. Like right now, there is no current force on earth that can do that and still engage in a capital market. So, you know, that's subpar conditions, right? I do want people to know that, like, that's why, like, I'm saying we can make a defensive argument about China and they're in a better situation to handle the current situation, but that's no guarantee they do anything that we want, that we as socialists might want them to do. And in fact, I suspect that we will learn eventually that there are factions within regional politics in China that are responding to this in different ways and have vastly different concerns here. But I don't think anyone, even people who I've seen who've traveled in China, can tell me what those are right now. It seems very opaque.
I mean, there are news reports I've read about how in rural areas that the basis of the Communist Party is no longer peasants, but small businesses.
Right.
And that's a big change. That's something that is a real political consequence for the future of China.
Right. So, like, because think about what our petty bourgeois class is like. I'm not saying that China's petty bourgeois class would be like ours because of the experience of the great proletarian cultural revolution. But I want to remind people, like, those people who remember that, Dong Ping Han always talks about that as a major sociological factor about why China's more functional. And I'm like, I agree with you. But in 10 to 15 years, those people really will be dead.
Yeah.
So what are we looking at then? Like, is that going to be passed down or not? And China does have the same demographic crisis that the rest of the developed world has. What is different is it's fucking huge. Now, I don't take the Peter Zion, like, oh my God, China's gonna collapse and, like, Japan's gonna invade, or whatever he's fucking saying this week. That seems patently nonsense to me. But I do think it means we can't predict what is going on right in 5 years in China off of what's going on right now.
I mean, the big thing that China has that's so different from our experience in the U.S. Because think about what, like,
well, other than massive class, like, the classes there is in living memory a time where, like, urban intellectuals and rural workers and factory workers all had to intermix with each other.
Not even
That's
talking
never
about
here.
Like the living memory thing in terms of, like, state ideology. Of, like, you have, like, the Maoist legacy that they can't get rid of.
Right.
There's always, like, imagine if all of, like, the Alex Jones types in society were all Maoist. Yes.
I mean, in some ways, it's like, it would be great if we had the wackadoos on our side for once.
Yeah. And they do. And it's like, I remember that, you know, like, people like Richard Wolff are really big in China. You know, they go on social.
Yeah, although it's interesting, though, because one thing I will say, Michael Sandel, who's also really huge in China, actually, the communitarian thinker, he does talk about the fact that, like, Western meritocratic thinking has totally integrated the educated Chinese elites, even in relation to the Communist Party. And that may have been reversed under Xi. He's writing in 2011, 2012. But I've taught those kids, and I saw it too. Like, those assumptions that you do not see in elders in China. Like, elderly people in China think that they're all equal and they can yell at whoever the fuck they want, and more power to them. Because
which is so different from other countries in the region.
Oh yeah, totally.
Like, I mean, to South Korea to Japan,
right? But I do wonder what that means for this cultural norm. But I also agree with you. Like the neo-Maoists they're not really I've got some people in China have told me, Derick, don't overstate them as a faction in government. They're not.
Yeah.
But as a faction of society, they exist.
Mm-hmm.
And they exist more after Hu Jintao. Now, Xi is particular, right? Xi is actually quite interesting to me because in some ways he's somehow managing to. The people who love him in China I know people who fucking hate Deng Xiaoping and Xi Jinping and love Xi Jinping, and I also know people who love Deng Xiaoping and Xi Jinping who love Xi, and I actually don't understand that. Some of that I think does have to do, and if you look at actual Chinese investment patterns, there's been a systemic disinvestment in the Chinese countryside and the peasants, particularly in the 90s and early aughts, that Xi reversed. All right. But beyond that, it's hard to say. I think also, I also think, and this is, I'm going to go ahead and say, don't trust anyone who says they understand what any of these leaders think.
Mm-hmm.
But it does seem to me, from what they've said, that China was actually surprised about the way the Russia-Ukraine war went down, that they thought it was going to be something more like Georgia.
Yeah. Well, most of the world was.
Right. That's what I thought. I thought it was like, I'm like, don't worry about it. It's going to be some Georgian nonsense. They're going to keep Crimea where it is. Like, because frankly,
now we have mini World War III.
Yeah. Mike Davis was actually, wrote, in Thanatos Triumphant, which I did a video on, which is like Mike Davis's last piece before he died, was basically in despair because he's like, well, all the rulers that we thought were acting rationally, we got evidence that they aren't. Like, and it's not just the West. So, I think he was a little too hard on Xi, but I think he actually does have some points about like in the past, I kind of knew factions in the CPC. Right now, I just don't know what they are. Like,
well, I think if you look at Xi, part of the reason he's so successful is because he so perfectly embodies the state ideology as like this ambiguous thing that can speak to a lot of different people.
He does deliver on it too. Like, to be fair,
he's
just speaking to it ideologically.
Yeah, but that is also a part of it, of like creating that effect. You have to put some skin in the game.
We have people that try to create that effect who barely put the skin in the game. I mean, Biden put,
because we don't have mass politics in the United States,
right? We don't have mass politics in the West.
No,
we just don't. Like it's because it's not. And I'm with Anton Yeager. I think it also hurts the right. No one really knows. You know why the right's so fractious and insane? Because there's no mass space. There's a bunch of like. And that's why I think one of the predictions that Dylan Riley and Robert Brenner make about like we're used to seeing GOP win in midterms, but that's going to stop because the base of the Democrats is more educated, more likely to care, and the base of the GOP that'll come to midterms is more disconnected from even the conservative base. And so they'll produce really bad candidates. I don't know if that's a long-term trend, but I think we've now seen it twice, right? Like we saw it in 2018, and we've seen it now in 2022. So what does that mean, right? Like, well, one of the things about that is just because there's no mass politics to consolidate the GOP base as a counterforce to like the tendency of electoral elites, to win. The counterbalance of that we don't know yet is that going to translate to anything in the general election, and we don't know, like, because the voter base will be very different now. But I would like to say it's not just there's no workers movement, there's very little mass politics, period. There might be mass movements, BLM, in some ways Trumpism actually, but does it transfer into politics? So far, not really. Trumpism didn't start off as a mass politics either. It's a mass politics on its way out. So it's hard to see. Whereas, there are mass workers movements in China.
Mhm.
They often are fighting against the state, but the
Yeah.
state actually will make concessions to them as long as they don't officially recognize it. But they will
Mhm.
like they'll give a lot of work, like striking workers and stuff. They'll demand. They'll throw a few people in prison superficially. I mean, like, and I'm not belittling that my people who are concerned about human well-being, like, but they do make concessions. What they're worried about is it's losing the illegitimacy of their rule through that. Um, and the ownership of capital in China is much more fair. Now, is it what I would even consider like true co-ops? Probably not.
Mhm.
Like, you take Huawei, the Chinese tech corporation, and everyone talks about how it's a employee-owned co-op, and it mostly is, but actually 1% of the shares does go to its founder, and it's made that founder a billionaire. And but can you imagine a U.S. company with a founder willing to take 1% of the shares, like,
Yeah.
and then have the rest of it managed for its entire employee base? I can't. And I've even worked for I worked for Lowe's, which actually is which gives its employees stock, right? Even if you're like a lowly cashier, but it's nothing like that. So on one hand, I think a lot of people, I don't know how we get Silicon Valley Bank failing leads us to China, except World Economics.
Yeah.
On one hand, I think China is totally misrepresented by its enemies. On the other hand, I think sometimes people over conclude from the good things that exist in China and maybe don't deal with some of the more difficult factors. And I think as socialists, we are incumbent to speak about all this as fairly as we possibly can, even if we're, like, say, defensive.
Well,
Um,
I do have one point that does connect it back, and I did kind of mention it earlier of how there was bank failures in China recently, and there was kind of some chaos because their version of the FDIC wasn't as responsive as ours is, as we're used to it. And I think that the difference in the kind of crisis that China is going to face at home, they're going to face for at least probably several more years, decades, even very traditional types of capitalist crises.
they are still subject to they're now subject to the market cycle in a way that they have not
Right.
been.
But what I'm saying is that their problems are going to be easier to fix than ours
Oh yeah, yeah.
because we've already dealt with them. We've already like the experience is already in history. They just have to like adopt like the regulatory mechanisms that have been already done in the West
And
for
it's
100
frankly, it's
years.
easier for them to adopt them than it was for us to.
Yes.
So yeah, but as you pointed out, their FDIC didn't seem as advanced as ours, but it probably will be now.
Yeah. In a
Like,
few years.
yeah, I mean, so I think I don't know, you know, people are asking us, well, do I think NATO will do this? And here's the thing.
Hmm.
I don't like speculating that way because, frankly, I've been right on some things, but the closer I get to trying to speculate on hyper complicated events where individual decision makers really do matter, the
Hmm.
more likely I am to be talking out my ass.
Yeah.
Right? Like, I've done that, for example. I used to at the beginning of the war because I predicted some stuff about like Zelensky's relationship to NATO once he realized that they like what the limits really were, that I was completely wrong about. Right?
Well, as I've been working on putting the compendium of Marx's articles on France together, like if you look at his very first initial reactions to what was going on,
Mm-hmm.
um, he was basically predicting a repeat of like the Napoleonic Wars, except like France would be socialist this time, um, and that there would be world war in Europe as a result of the 1848
Yeah,
revolutions.
yes, yeah. Like, Marx makes bad predictions. Like,
Yeah, well, I think he learned from it a little bit, and when he's talking about um, when he and Engels are talking about like, oh, history repeats itself second time as farce. Like they're also kind of thinking about not just Bonaparte, but I think they're also thinking about what happened to the revolution, what
right.
happened to, and also what they thought was like they had these high like hopes of
It's
what it
not
could
just their
be.
enemies that are farce, it's also their friends.
Yeah.
Like, so uh,
And we're talking about the 1848 revolutions.
Right. You know,
that inspired everything.
Right. One thing I will say, though, Zane, to answer some of your question, I think there are elements in NATO who do want to restart the Treasury conflict to lead to break up Russia. I think there are elements in the United States government who actually want war with China, and I think there's a lot of elements who don't want war, but do want us for both domestic and international reasons to look like we're going to war. If for no other reason than it leads to justifying the insane levels of military spending that we currently have. But I also think, well, you might go, well, why are the Bidenists big on this? Because they don't really want war with China, do they? And they probably don't. But you got to think about what this generation feels like. It's like, I always tell people generation mindsets actually are helpful, even if they're marketing terms or whatever. But like, I've talked about the long durée civic shifts in U.S. culture, from civic republicanism into neutral administrative state into the crisis state. The complication of that I wanted to point out to Michael Sandel, where I got this framework from. One, he doesn't overlay the economic structures on it, and when you do, it actually still works. They actually it's kind of explanatory why they're doing it. But there's also the fact that during the transition from the civic republic to the neutral administrative state thesis, kind of the way we operate, there's a big crisis. It's called the fucking Cold War, and World War I and World War II. So, like, you know, three of the biggest crises the world has ever seen, and you get the feeling that a lot of people of Biden's generation literally cannot imagine undoing the political divide without a fucking Cold War. What they're discovering, though, is there's not enough social solidarity for even that to work. So, like, that's what I think is part of the logic there. And yes, there's always a faction of military planners who's like, break every nation but us up, because, you know, it makes us the largest nation. Duh.
Well,
like,
you know, there is an echo of Trump actually in these policies in a weird way that you might not expect. I mean, there's the obvious thing that, like, the confrontation with China, but the one thing that kind of went under the radar was how Trump wanted to use the Department of Defense spending as a part of, like, industrial policy in the U.S. And Biden is kind of doing the same thing without talking about it, and that's part of what a lot of the big spending is doing. Like, some of it's like explicit industrial policy; it's going through the Department of Commerce, but I mean, it's also going through the DoD and a lot of other departments. And this is like a part of that is going. Justification is like rivalry with China. But I think the idea is also more domestic of getting jobs and stuff for people and whatnot, and investment.
Yeah,
which I think is an important thing. That, like, now this is a new framework for domestic politics. It might mean that we're breaking out of the stagnation that we were in previously.
Yeah. Here's the thing that I think is interesting. This is the thing that I think. Have you read the Brenner Riley 7 theses yet?
No.
Okay. So maybe Riley and Brenner attribute two things that progressivism's winning, and they actually say that, like, social democracy is the default of the American left. Progressivism is like the compromise, and it's a capitalist compromise even more than social democracies, etc. But they say that we have fundamentally misunderstood class character in the United States, and like that class movements, even in the height of class movements, even high mass politics, did not frame themselves as one-to-one class movements the way we tend to try to pretend that they did. And that leads us to misunderstand the ways in which the Democrats have delivered. But then they actually, and so they talk about Biden being awesome. I think they overstate the case for Biden, honestly, because they have this whole section called Biden is Keynesianism without growth. And my first response to that was, Biden is Keynesianism that doesn't work. because if it doesn't produce growth, it's not Keynesianism and it don't work. So, but they were saying it's been better to constituencies of various classes than people realize beyond the identitarian politics gloss. And I think there's some truth to that.
I mean, this has been. I mean, think about the Democrats' response to 2008. I mean, with what Obama did, the auto bailouts and stuff. In a lot of ways, I was about to call him Brandon. Biden, like, has continued the same kind of stuff that Obama did in terms of economic policy, and trying to get more of like I mean, like, Obama did much better with working class whites because of that. There might be some logic there with Biden as well. But I mean, I think that a lot of the Democratic Party strategists and the people in like the party more broadly that are not in government don't understand what the Democratic Party as like a governing apparatus really does to maintain power.
No, they don't. I actually, one of the problems of the Democratic Party is it doesn't have enough regional bases outside of places that are totally stuck up their own asses, sorry, New York and California. And it doesn't, it has an activist base. It actually does not fundamentally understand what it's engaged in. And sadly, I have to include the DSA in that. Like, no, well, I mean,
you can also include CPUSA in there too.
Yeah, I totally do. Actually, I actually have my big complaint is like, oh, you anti revisionist. We're gonna have our own party people. Well, all you guys is front for the same activist organizations anyway. So like I don't see what the difference substantively is, except that you put Gloria La Riva on a few ballots. So. I'm not, I'm not saying that to like say that the left is doomed. What I do think though is like the left in America has been outflanked because it actually seems to misunderstand the nature of class conflict in America and try to oversimplify that as a response to identity politics. And I've said this since 2012 that it was even before the Mark Fisher articles. Like I was also really annoyed with campus identity politics, and I've been dealing with it for like, by that point in my life, like 13 years. And I'm like, fucking weird ass non-community of a deer. But then I'm like, I started seeing the beginnings back then in a particular response after Occupy to like workerism, but it actually treated workers politics as just another identity that was just larger, that you can mobilize more. And I was like, okay, so that was the 99 versus 1%. Then I'm like, well, eventually people are going to realize the fractures in this. And of course, Bernie fails, and we get twice, and we get the PMC debates. And there's elements of truth to the PMC discussion. But the thing is, and I actually did a video about this recently, the element of truth to it, you have to abandon what John and Barbara Ehrenreich, or even what Kath and Lou say it is.
Yeah.
You have to actually go back to the idea that it's actually a managerial elite of about 7% of the population that has control over cultural institutions and funding, but are not technically speaking capitalist. And then I'm like, well, okay, so you have a PMC thesis that works, but it's not the PMC thesis. It's actually like a structural managerial thesis that like something like there's like a strata or a quasi class. What Brenner and Riley call it a new non-class, and I'm like, what the fuck is that? Like just call it a social category then.
I mean, this actually does relate back to how this began, because the tech industry, people have been lumping that in there as a part of the PMC. And people were complaining, like, when
even though tech industry doesn't require you to like the criterion that Barbara and John Ehrenreich put down is degrees, and I'm like, the tech industry is the least degreed, highly skilled workforce. Like, so
people were complaining when the layoffs were happening on Twitter that, like, oh, these people are running to their friends in like the New York Times and whatever. Oh, that must be the reason why, and just that not it's so chaotic and causing all these problems that are embarrassing.
Yeah, it's funny who these people think they know, like who knows each other. Like, yes, I know a few tech workers. I actually don't know anyone at the New York Times. No, that's not true. I know one person who's written an article for the New York Times, but generally that's too prestigious for my blood.
Yeah.
Um, but my thing is that the same thing that Brennan Riley said to that thesis is like, okay, you're really positing that 1/3 of the U.S. population is a ruling class over 14% of it, which you're now arguing is somehow a bigger mass base. But here's the thing.
Uh-huh.
I think that misunderstanding is an inevitable result of having frameworks from the Fordist period. We are seeing that neoliberalism seems to be changing as a way of managing capital, and we don't understand it. So we pull back from the beginning, from basically ideas that came up in the New Left. And if you look at the age of the people who posited this stuff, they're all over 50, and it's being picked up by people. It's basically the same thing of fighting the old fight again. There is truth in it, and that there is some kind of administrative class or administrative strata. I don't know whether I call it a class or strata, and it's very real. If you want to call it the PMC, fine, but know that that's not the definition that most of the people who came up with that term meant by it. Now, terms evolve. You can use it, but it's confusing. And what I find confusing about it is people do go back and forth depending what they mean. And I've had people who will tell me what they think PMC means and then go back to the broader definition when it is convenient to complain about liberal politics on campuses. I also think it's interesting that liberal politics is declining on campus. It's not declining amongst like the administrators of schools because there's now DEI institutions within universities, and they have their own bureaucratic drift. So what do we deal with this? Well, I made a joke to you yesterday. I was like, "What?" It wasn't to you, but it was someone in a group that will not be named. That where we talk economics all day. And I said, well, if people are really mad at their PMC problem, they just may have taken care of half of it in California. So
Yeah.
like, and I was like, I just don't think I don't think it's explanatory to be that expansive. I also think we have to admit that the working class in the developed world, not just in like the labor aristocracy versus not, whatever definition you have of that, also vague at this point, didn't used to be, but 100 years, you attach a bunch of different ideas to a name. And racial and gender tensions, which are very real. Like, you look at all those divisions and you just look like sectional divisions in the economy, which I think are far more explanatory, like of what people actually do.
Well, in terms of like controlling society, like what people really want to talk about, I think, but don't have the language to articulate it, or have a very stupid language to articulate it with, is a way to talk about the state as something bigger than just the state. Which I think Alfred's there nailed pretty well, which I've talked to you about before.
Yeah,
About
yes,
the
this
state
will get to
apparatus.
our why I am a humanist and why you're not, even though we agree on like 90% of everything else.
Well, I
Uh,
mean, Well, I mean, to think about just to talk about structure and how people perceive like ruling class and what have you, or ruling society, like you, for Marxists, we have a distinct idea of what a ruling class is that is different from the purely political aspect of it. Um, Although that's important, like I mean, Marx will talk about like parties being like the direct representatives of the bourgeoisie is for certain parties, like the Party of Order in France.
mhm.
Um, but when people talk about a ruling class, and I think part of this is Cold War propaganda that people think about this way, um, but it's also like a natural language thing of like the people who literally control how things work in society. Um, and in that case, like this is very obvious. Like they're in like what was really like if we look at this event, like on you have these different actors in society that had these different roles that impacted the broader world. of like there was the big venture capitalists like Peter Thiel had a very big impact on what happened, and ultimately what everything went back to was the state, with like the FDIC and the Fed stepping in and deciding like this is how things are going to happen from this point on.
Yeah, I
And
mean,
everybody is like getting pissy of like no, we need to step in and like guarantee 100% of these deposits and what you
yeah, it was basically the libertarians are asking for there to be no moral hazard,
as they always do,
which is, of
every
course they
single
do.
time.
Like it's like we believe in moral hazard, except for us.
Exactly.
Like,
And like this is, but and so what's going to happen? They're not going to cave on that. That they are not. It's if they do, it'll be the most stupid thing they've ever done. They're not going to do it because
even our government has to kind of tell its bleeding edge of its obnoxious bourgeoisie where to stick it.
yeah,
because
the people like in order to everything is done to preserve the bourgeois class, but it doesn't mean you in particular.
Right, exactly. Like,
and people confuse like who sets up like who preserves reproduces a system, this broader state apparatus, as like whether it's like the media talking about this or like these actual bureaucrats or what have you, as the people really in charge.
So
Because
I think what you would call this structure we're talking about as the actual what I would say like what we're talking about as the PMC that matters is like the 7% of elite managers and professionals that actually have fiduciary responsibility and actually have significant control, not just over like you as an individual worker, but over labor as a whole.
Well, I think you can go further. You could
include the media apparatus in that too.
Yeah.
At least not reporters though. You would I mean, all those guys do is treat stenography these days anyway. But
they'll get automated by ChatGPT soon enough.
Yes. They're gonna be proletarianized again, but not in the fun way this time. But because ChatGPT is actually even cheaper than interns.
Yeah.
And there's a lot of perverse incentives. One thing I explain to people, why is the arts and journalism full of rich people now? It's because, well, rich people are the only people that can do it for extrinsic motivations.
I'm working on right now an article about AI and automation, and what I'm saying is killing bourgeois dreams.
Mm-hmm.
Because so much of like the most absurd discourse online right now is about like these hopes of being a professional artiste or writer or whatever, which some people like managed to like. There's been a niche that's recently happened because of the internet with digital art and stuff, but this is like the prices for that are going to fall with what's going on right now. Very few people are going to be able to do this, and the people who do will be the ones who have had the money to go to like art school and
or they
take
already
the time
have
to do this.
They have surviving like social clout. I mean, the thing is, like, artists weirdly was like pointing people. Both Stanislav Lem and Roald Dahl actually predicted this shit in the 40s. So like,
it was already happening by like pretty well. Yeah, it started pretty quickly.
Right. I mean, like, so and actually, like, the problem that you have is there's a lot of overpromise on ChatGPT. There's a lot of stagnation that will happen if we over rely on it. I realize that it's not. Mm-hmm. It is just using natural language processors and throwing out things that seem true based off things that happened in the past. Don't get me wrong. I've talked to Dwayne Monroe. I know the problems, but the idea that we need to double down on artist discourse. We only have to do that because we're in capital, like, honestly, because like if we weren't, then we would just see this as a way, like, we've unlocked more art and more imagination through efficiency. Yeah. That would be a good thing.
And here's the other side of that, is that the only reason that any of them can be automated is because they are already within this commodity producing system
Right.
that allows that is taking, like, you're an artist, you get like some statement from your client saying this is what I need, just like Stable Diffusion would, or whatever program you're using. You put it in there and you get an output, and
Right.
sometimes that process iterates, but it is an input output process. It is just like, and Marx was very clear about this, the reason that automation happens is because the process of labor has been regimented and like set up in a certain way that it can be copied and in the machine.
Right. That's why industrialization is using human. It's actually using human beings as a variable capital because they're human beings. You can pay them differently, but
Mm-hmm.
they're using them like a machine, and for the trend of socially necessary labor time. You want to reduce that. Like both. The thing is, if it happens in socialist conditions, that's more free time and more stuff we can do. If it
Yep.
happens in capitalist conditions, it sucks.
Yeah.
But
and people have this notion, everybody, even the working class, has these notions that the highest achievement you can have of your of some kind of talent or hobby or something is if it is producing value, if you can turn it into a job or something like that. And I had that dream as a kid. I had a dream that I would be a professional writer. That's not going to happen.
Right. Me too. I will say there are a lot of people who think that this is going to replace PhDs and stuff. It won't. But what it does do is there's a whole strata of education. So, for example, I've actually, I work in education, and I can tell you, ChatGPT can do better than most of my students, even the very brightest ones, until you start getting to graduate school level work. Then it begin like I can like having read plenty of that and having read a lot of this ChatGPT stuff, it can't do that. It might be able to, but it won't. The thing about the
There's
graduate
some
school
things
level
that are
work,
too specific. It
right?
doesn't have enough data on.
It is that there's not a ton, like you literally what you're doing in graduate school work in theory is producing new insights by the recombinating other stuff or by actually doing original research. ChatGPT cannot do that. That algorithm
even
won't
the
do
Bing AI that actually does Google search stuff or Bing search stuff, like that, there's limits to what information you can find in a search engine.
Yeah.
And
I broke ChatGPT already asking it stuff like write a poem in the voice of Baudrillard about Skittles. Which I'm doing just to show if you put in like vectors that like no one's done before, it can do it. That said, all right, it totally fucks education. Not gonna lie, like because and it's happening at a time where literacy skills are declining. And I know I sound like an alarmist on this, but I'm gonna say this: literacy was given to the working class by the bourgeoisie. Yes, it's a bourgeois value. It's a good one though, and we shouldn't just give it up because like the bourgeoisie gave it to us. Because it's gonna be. I don't want us to be. Like there are people on the left now who are literally doing the bourgeois work for them by selling like the impringleization of proletarianness to it. If for those you don't know what I mean by that, I'm referencing Matt Christman's Pringles in a can as opposed to the Marxist peasants as a sack of potatoes. And I'm like, yeah, like, I think there are people on the left who are literally selling that as a good, because the left is used to in America in particular, but in the West in general, is used to a certain kind of antinomianism that resists discipline. And unfortunately, we were playing
Foucault's
around.
Fault.
Yeah, that's a lot of people's fault, but Foucault's one of them. So I think we have to really be careful with that logic. We really should be like asking people. I can't imagine a political subject that basically has the lack of self-discipline that one expects of people who've fallen into lumpen classes. Like, and I think that's because like there's a reason why Marxists have historically been against that. Some of it's moralism, sure, but some of it is if you really want to represent yourself as a class, you do have to have discipline. Like, And self-discipline is better than party discipline, my friends. Like, it really is. And party discipline is better than nothing. But like, you know, that's important. And work conditions right now are like part of the conditions of factory labor built that. This is one of the things where I lose sleep at night thinking about sociological conditions of proletarian labor, because the physical and emotional and educational apparatuses of the 19th century industrial socialism made it look like it was going to embetter the proletariat forever. I mean, you read Kautsky talking about this, and he like literally thinks like that basically we're all going to be PhDs in the factory. Like, I mean, it's that. I mean, he didn't think that, of course, because no one would have thought that the educational system wasn't expanded, but he more or less thinks that. Mm-hmm. Marx does have a more dialectical view in Capital about that, but that like there are points where, you know, there's antisocial tendencies too. I mean, one of the things that I like to point out to people, somebody was yelling, somebody on one show was talking about, well, with OnlyFans, there's more sex work now than ever before. And I'm like, well, there's a lot of commodification of personal relationships to things like OnlyFans that are probably negative and definitely lead to young people being lonely. Sure. But 40% of women in 1860s London were sex workers. Just want to point that out to you. Mm-hmm. Like, basically, if you were not an heiress or married, you were a sex worker. Those were the options. That wasn't true for all of Britain, and it wasn't true for all of capitalism at the time, but it was definitely true for London. And I bring that up because these kinds of sociological conditions are presaged to certain things, right? Like we have to deal with them honestly. And some of them with the working class, I think, are ugly. There's a tendency of this workerism to also like pretend that like there are no vices amongst working class people, which is one of the most hilarious. Like, nobody who's come from the working class can say anything that dumb. But yeah, we don't know the percentage of people on OnlyFans, but I promise you, it's not 40% of people who are sex workers in the sense of being what we talk about a sex worker being in 1860s London.
Well, you know, I mean, this is kind of relates. I mean, OnlyFans is a kind of service model that's been copied throughout like the new technology startups and whatever. And I don't know if some of those will be destroyed by the interest rate environment and
I think some will.
But I think that model is probably here to stay. And the problem with it is, and I don't even know if the new investments and increase in productivity will undo it, because they've like manufacturing and stuff requires so far less people than it used to back in like the 20th century. But the fact that like the thing about these models is that business models is that they are very atomized in terms of the working class experience.
They turn everybody into petite bourgeoisie, basically.
Yes. I mean, even more than like if you're like an OnlyFans girl, you're far more atomized from like other sex workers and some prostitute and working the streets in London.
Definitely from like, say, a porn worker in the 1990s. Like,
yeah. And the thing about that is, and this applies to all professions, it applies to Uber drivers and delivery people and all kinds of like people who do like freelance stuff online. I mean, the problem that for us is that one of the things that Marx predicted that was necessary for socialism to happen was the socialization of labor.
Right.
And for him, so this was directly connected to the socialization of production. And if those two things aren't connected anymore, then we might have a problem.
Yep, this is a revolutionary subject problem.
Yeah.
And yeah, it would imply that the good guys lost in the 20th century is what it would imply. But I think we do have to deal with it. There are countervailing trends though, and like that's the thing. Like we talk about social media is alienating, and it is.
Yeah.
As it gets more commodified. as a person who lived through social media when it was much less commodified, it was not alienating. And like, yes, I know that, like, I know I'm talking to an Octosarian. He can use the words he wants to. We're talking about the same thing. So we can talk about that in that sense, that we've had a decreasing social subject, the social skills tied to labor. I mean, there's also a reason, for example, why it's been easier to take the traditional union model into schools and nurses than it was to Starbucks. I mean, we're doing it in Starbucks, but we don't know how well it's going to work, because the whole contract negotiation is different. There's like, I pointed out to somebody that, like, yeah, we had like 600 applications for new unions. 450 of them were just Starbucks, and they were 20 to 30 people a pop. Like, as
And
opposed,
the thing about that is Starbucks is even, it's easier than a lot of the other like restaurants and chains and stuff, because it's actually all owned by Starbucks.
Yeah,
the other ones are all
franchises that are impossible.
Like,
and so that's one of the things where I talk about our new labor militancy. I think the new labor militancy is real. I don't think the new labor movement is real, and that's a different thing. And unfortunately, there's also structural reasons for it, because most of the union's money comes from land holdings and investments, not from dues. Well, not most, but a ridiculously high portion. Okay, so all this is to say, to go back to the original, I think we can say this is not 2007, although I'm going to put the asterisk of, like, I'm willing to eat my shoe on that, because it could be. There are some fracture points that could break where shit goes haywire, but it doesn't look to be happening right now, right? But it's not a good sign either, I don't think. What do you think, Nico?
So I think that it's definitely not going to be as bad as 2007. I mean, there's always a chance that there's some complexity thing here that I'm missing. But in terms of just like the financial conditions of how extreme things are relative to each other, it doesn't look as bad. There are echoes of it in the housing market. There's echoes of 2000 and in like the .com boom and bust. There's echoes of even like the savings and loan crisis. The thing, I mean, and even the Volcker shock slightly before that. You put all those together, I'm not quite sure what you get. We're definitely in for some kind of recession. But the fact that the labor market is
we're in for a recession for a while. I mean, just to like,
I mean, we were like, look, I thought we were going to have one in
already,
like 2000, but like unrelated to COVID. And
oh yeah, me too.
2020. Sorry,
that was my prediction too. Is 2020 was going to be the beginning of a downturn year, and
but it was honestly,
explode,
like, weirdly
on who
enough,
was president.
The response to COVID has meant that whatever we would have had, we're probably not even going to be as bad as that would have been, because of like how much that changed the financial system.
So yeah, a little bit of social democracy, while not socialism and not defeating capitalism, is actually kind of good for capital, just to put it out there.
Yeah,
like,
I mean, left to their own devices, things would be a lot worse.
Right.
But I don't. What I wouldn't expect is like this bank closure to lead to a bunch of contagion, leading directly to more bank closures. If more bank closures happen, it will be to like different conditions on the ground.
Yeah, I think what we should be more worried about is 2% growth, and if the Fed actually raises the Fed rates to 6%, that is concerning, because that's going to trip off all kinds of fracture points, and we don't know where they're going to cut. Unfortunately, one of the things we're learning about the modern economy is it's so complex. No one, like, we made the joke in the beginning, and I'm going to end on it. Most people who tell you they understand economics on a systemic level that is predictable are full of shit. like because it is too complex at this point for any one mind to look at all variables at once. There are those of us who could look at historical variables and tell you what the most likely thing given priors, but as Nico and I both been talking about, the priors are getting so complicated, we are having trouble finding historical examples that make it clear, what's going to happen. In the long run, is that good for socialists? It could be. I'm not an accelerationist though, so I'm not.
Look, here's the best case for socialists: is that this interest rates are normalized, but and a lot of these unproductive enterprises go under. The recession, what that happens is brief, doesn't hurt the labor market too much, and we see a lot of big investment resulting from the recent government spending and stuff.
Yeah. I would say, I say that the best case scenario is we have a recession, and like you said, it leads to reinvestment into physical infrastructure again in production. The worst case scenario is they try not to do that to maintain current capital relations in amber, and shit gets real weird.
Yeah.
The
worst, that unemployment goes way up, the productive real output goes down, and
fracture points on world politics start breaking, and who knows? We've already seen how fragile the globalized neoliberal system really was. That's one thing everybody has learned, including the capitalists themselves. So yeah, there seems to be an impending social reproduction crisis. Yes, that's separate. That's all over the developed world, which is why I think the immigration holdouts are going to lose. So it's hard to say. I mean, the one thing I think we're seeing is that you're probably going to see a worldwide population stabilization, period. Is that good? Well, that depends. Under current conditions, actually, probably. But to say that is not because I'm a Malthusian and think things have to be this way. I'm just saying, under the way things are. Yeah. Do I think we're gonna have mass death and die off? Well, I'm more worried about climate change for that than anything else, even than food. I'm worried about what happened in Pakistan last year, this year. God, time's getting weird. I'm getting old. Nico, you're younger than me. When did the Pakistan thing happen?
I think it was this year.
Yeah.
I'm not very good with time either.
Yes, and Soon says, yeah, the economy crashed in 2020, but we were all in lockdown, so no one paid attention, which is also true. So if there is this weird blip on the map where it's boom, and then boom, it's just so yeah, it was last year. Okay, I couldn't remember if it was early this year or late last year.
Yeah, me neither.
But I think we will see more of that. That's bad.
Mm-hmm.
I have no idea what the hell's going on in India. I feel like India is super important, and we don't understand it right now.
Yeah. There's a lot going on. It's very disorganized.
I also, Nico, what do you make of this? One of the things of world stability we're going to have to deal with, everyone's been focused on U.S. decline. I think U.S. is internally all kinds of weird, totally true. But the real rapid decline, and I predicted it, this is, people talk about my humility. I'm not humble on this, has been Europe.
Yeah.
Particularly the UK, but Europe in general. What do we make of that? What do we think is going to happen as Europe becomes a more regional player and not one of the dominated parts of the transatlantic superstate or what the fuck ever?
Well, it'll probably become less stable. That
seems to be happening. That already seems to be happening.
And France will probably become more important in the European politics in the region. I mean, it's already like one of the big three, but I think it will be the big country in controlling things.
So it'll switch from the Fourth Reich to the from the Fifth Reich to the Seventh French Empire or something.
Yeah.
Like um where does Turkey play into Euro politics? Turkey was going to Turkey's hard to predict because this natural disaster actually exposes a whole lot of weak points in Erdogan's developmental plan. It is still able to play negotiating powers in a way we haven't seen since Nasser, but its economic fragility has been exposed by natural disasters in ways that's probably going to hurt its ability to get to be one of the builders of last resort in Central and South Asia. So
Turkey actually has the same problem that Europe does in terms of natural resources. It's incredibly dependent on Russia and other countries for natural gas, and it has even bigger financial problems because of that. With the inflation that they had, there's lots of social instability coming forward. And unlike Europe, well, I mean, you can think about Ukraine certain ways, but the conflict that they're creating with the Kurds in the south and with refugees internally is going to unleash some nasty stuff. And I have a feeling that there's going to be a lot more domestic conflict in Turkey because of what they're doing.
Yeah.
And part of that is because they're getting involved in Syria so much, it's going to increase flows of extremist ideologies and weapons and things like that, in my opinion.
Yeah. So we're going to see a lot of weirdness, and I think we should be looking out for it. But I think the big takeaway that we're both telling you is people are predicting the final crisis. I know my friend Sean KB tends to think I'm a little bit too cautious on final crisis talk, but I'm also just like, well, we predicted the final crisis a bunch, my friend.
You know what I'll predict? I'll predict this is the penultimate crisis. We'll get him next time.
Yeah. But I do think we have some. I think things are gonna get weird. I also think politically, we have underestimated the center's ability to evolve.
Yeah,
and we have got egg on our face politically for that. What will that mean in the future? Because it doesn't look like they have it right now. I don't know. I mean, one of the I was going to say the last thing I was going to bring up from the Brenner Riley thesis, and Nico, you should read it. You'll disagree with a lot of it, I think, but you should read it. One thing they did point out, though, is part of the incoherence of Trumpism was that Trumpism had a base that was in fundamental denial of the stuff that they were doing that was vaguely social democratic during the beginnings of COVID would work because they didn't want to admit that. And so it led to this emphasis on crazy shit while they were
didn't want to
doing
admit that?
Trump's coalition. So it led to this emphasis on crazy individualist shit while they were doing the things that the Biden administration were doing. And so it seemed particularly incoherent. And I think that is a problem. I think people think the right in the United States is more unified than it is. It seems to actually particularly disunified right now.
Well, I feel like, I mean, that might have been, I think since the midterms especially, things have kind of fallen apart on that narrative. That in those CPAC just now, that they're kind of in disarray. Now it feels like their activists are even more online and out of touch than the Democrats are,
right?
Which is saying something. And they're probably in for a very rough primary.
Right, it's going to get quite interesting. But I also wonder. Because while I'm talking about the center can't hold, the center strategy of running Barack Obama's like Kamala Harris and Lori Lightfoot. What I mean by that is specifically, right demographics, come from a fairly elite background, maybe has historical left pedigree in their family, immigrant, but relationship to law, particularly prosecutorial, and a cipher. That worked with Barack Obama. It has not worked since then.
Because there was more to that than Obama.
Right.
He was trying to depoliticize things and make it.
It was yes, we can, but depolitical.
Yeah,
Like what's interesting about Obama is it's
he didn't play up the identity politics like they do.
no, nor actually it's actually he downplayed them.
Yeah, exactly.
And the other thing he did that I think is fascinating and missed is that he did run as the ultimate insider outsider until Trump, like
Yeah,
because he was a political animal, but he was cutting against it, etc. I think that won't work again anyway. But what the Democratic Party operatives, and we talk about like the operatives don't understand the power base of their party. What they took from that is right demographics cipher. Progressive demographics, but maybe strong, prosecutorial stuff to appeal to Democratic conservatives. And what we discover is those people make nobody happy.
Yep.
And so after the baby boomer Democrats and the geriatric ghouls of the Democrats are gone, I don't know what we deal with there. I don't know what the center looks like after that. Actually, I really don't. Because those ghouls are dying, like quite literally. I don't mean like they're 80, but so we'll see. What does that mean for U.S. politics? I don't know. But if the current trends on DSA membership are any indication, it's not going to be the Jacobin left. It's the left that's going to be standing to fight that. Who knows what that goes? So yeah.
Well, as we go into the next crisis, I feel like the same as before every other crisis is that we should have told people to learn more political economy.
Yeah,
and read more Marx.
The thing is, I agree with you, but only if they're going to use the Marx. If they're just going to fucking read it, I don't actually know that that like look. I used to be involved in the annual self-flagellating recitation of Capital Volume 1, too. But yeah, I agree with you. Actually, here's what I would say. They also need to learn more history and learn more of the current, not because history is going to repeat itself, but you'll notice we can only talk about this and talk about where we do and don't know stuff because we're looking at models from the past. That's what we got. Like, they are helpful. And actually, they're helpful even in letting us know when we don't know something. Like, so don't let those dirty analytics let you forget that history matters.
Yes.
Anyway. All right. And on that note, thank you so much, Nico. Nico came on real short notice because I was not expecting SVB to go down this quickly. So I actually was just writing something about economics to do a show. And I was like, and actually fan of the show and friend and actually co-host on my Hal Draper series, Jordan Dupin, was like, hey, did you hear about this bank? And I'm like, yeah, but what happened? And like, it just crashed. And I was like, shit. Okay, let's I'm like, God damn it. I just wanted a nice Friday when I didn't have to check the news in the morning and just do my grading for my class. Like, that's all I wanted to do. Anyway. And on that
I'm actually kicking myself a little bit. I was thinking of buying Tennessee Valley Authority bonds yesterday or the day before it happened. I was like, damn it, I should have pulled the trigger on that.
Yep. So yeah, and actually to plug something since I'm here, I'm gonna let Nico plug and we'll go out. On all my new series, there is a series where I have Jordan read historical debates in Marxism with me to be the proxy of a person who is smart but doesn't know all this history, so she can remind me what I need to explain. Because I sometimes don't know what you don't know. And so we're doing that. We're starting with Hal Draper text. We're going to pick text from all kinds of this. We're going to do a lot of Hal Draper because it actually weirdly covers a whole lot of the transition from like the classical Marxist left in America to the new left. But we're also going to cover other kinds of tendencies. Don't think they were only covering Trotskyist stuff. So we'll be doing that. And yeah. So Nico, what would you like to plug? I know you're working on a book about Marx. So I mean,
Oh
actually,
yeah. Well, I hopefully they'll be coming out with Cosmonaut sometime this year. Their publishing arm, a book on the collected writings of it. It will be. I will just have written the introduction and done like added some footnotes and stuff. But it'll be all of Marx's works on France, his articles like Brumaire, the class struggle, Civil War, that stuff. So that might be coming out this year, and I
I'm
also have
excited
my
for that because we haven't had one of those since like Progress Publishing went out of business when the Soviet Union fell.
yeah.
So
Well, a lot of it is from a lot of the text is directly from that. But
yeah.
I also have my website, casperforum.org, where you can discuss political economy with like-minded peers. We're having lots of great discussions on planning and things like that. And check out my stuff in Cosmonaut and Palladium.
Yeah,
My
definitely.
Substack.
A few more things as I have people here today. There are there's the second in my series on vulgar materialism is coming out. Abby Hassan and I are talking about complexity as it applies to labor struggles, and applying complexity theories to labor, which I think is kind of enlightening because Abby and I have different concerns about that. I talk about building structures that are more resilient, and he's concerned about actually having labor build power stuff. So that comes out on Wednesday. I mentioned the Jordan thing. I also have for those of you who like when I talk to Doug Lane, I only talk to him once a month. These are the agreements of our separation. But no, I will be doing a Pop the Leftover on Sublation channel. I believe sometime the 3rd or 4th week of March, and it'll be on the reason why epistemology actually really kind of does matter to politics. Very Doug style discussion. Doug, really thinks about philosophy, but he's actually, in some real sense, he's actually right, because one of the things that like we were criticizing him on is actually kind of an epistemological question. So that will be coming out in the next couple weeks. I'm going on Macro and Cheese to talk to MMTers. That'll come out, I don't know when, but it's happening soon. I kind of feel like it's gonna be interesting. I don't know if they know what I actually think.
I'm sure it'll be entertaining at least.
Yeah. So, and I think the topic is roughly understanding the different kinds of socialism. So that may be what I'll be doing over there. So we'll see how that goes. So all that's coming up in the future, plus all kinds of other stuff. Thank Nico for coming on. Check out Nico's work. Nico, thanks for giving up an hour and a half, 2 hours and a half of your life on less than an hour's notice. So
No problem.
with that said, have a great afternoon, everybody.